are being joined by Mr. Manoj Bhatt, the MD and CEO at Mahindra Holidays and Resorts. He's joining us on the show right now. Sir, thanks so much for joining us. It's been a good quarter overall for you. Help us understand a little bit more about how quarter 4 has been for you. What's the outlook going ahead? And let's start by talking about member addition. Because while all looks good prima facie, your member addition was down 63% on a year-on-year basis. What has caused this drop? Because we were expecting the Kumbh Mela to act as some sort of a tailwind for the business. Has that happened? Have you seen any impact from the Kumbh Mela? And if you could help us understand this drop that we've seen in member addition in quarter 4.
So first of all, thank you for having me on the show. So if you look at quarter 4, actually it's been a very good quarter. If I look at various metrics around revenue, in terms of resort revenue growth, for example, our resort showed a growth of 14%. If I look at profit growth, I think it was about 61%, excluding some one-offs. This is the standalone numbers which I'm talking about. I think you're right. I think member addition was down, but I think that's part of our strategy which we have been articulating about trying to make sure that we actually focus on members and focus on the members who we can serve with our current model of resorts. And that's something which I think meant that we have looked at where are the members coming from, which are the areas we are actually going into. So we have eliminated some channels. So that's had an impact. The second theme is obviously premiumization. I think our average AUR is up 39% roughly if I take a full year basis, which is the average sales value. And if I take just quarter 4, it's up 82% on a per member basis. So I think we are really seeing an uptick in terms of more premiumization and led by product mix as well as geography mix. So I think those are some of the initiatives which have really brought some of the numbers down in members. And from our perspective, we are focused on making sure that member to room ratio, which is a factor of availability, I think we really look to add a lot of rooms. So I think overall full year we added 520 rooms, which is the highest ever room count addition. We added about 7 new resorts during the course of the year. And what that does is actually it provides members a lot of options and improves availability for them. I think your last question was about the Kumbh Mela. So our model is not based on short-term swings because our model is more member-based. So really, I think while these help in creating destinations and making them popular, but I don't think it has an immediate impact on our business per se, because we are not the conventional hospitality business. I think our business model is based on members, and then how do we make sure that we provide members the best of experience.
Right, Mr. Bhatt, hi, good morning. This is Ankita also joining in. So, Mr. Bhatt, resort occupancy has taken a slight hit as far as on a year-on-year basis. How does the demand trend look like for quarter 1 and quarter 2, given that we have the summer holidays going on and we also have the upcoming monsoon season?
Yeah, so I think that's a great question. So if you look at occupancy, the way to look at it is that whenever we open a new resort, I think that resort takes some time to hit our normal occupancy levels of 84%. So if I look at the numbers, I think you should look at it from that perspective, that our existing resorts have done equal or better, and the newer resorts are slightly lower. But that's something which is a temporary phenomena. We don't see any dip in enthusiasm and any dip in trends in terms of people actually holidaying, our members holidaying and actually taking vacations. So I think as I look into Q1 also, we do believe that it's going to be a strong quarter like always, and then that those patterns have not changed because they are fundamentally driven by 2 or 3 things in my belief. One is, of course, we are seeing more and more people doing shorter holidays. They are doing driving holidays, which are helped by better roads. I think the flight connectivity has helped. So I think all of those trends remain intact. So from our perspective, I think we are not seeing any trend of any demand weakening. And that's probably more in line with the industry also. But specifically for us, I think we go into Q1 with no in trend in a continuation of the strong demand.
Mr. Bhatt, sounding good. Let's talk about the guidance that you've shared to double your inventory base from roughly 5,000 to roughly 10,000 keys by FY30. You're already north of 5,000, 850, 870 plus. What are the key growth pillars for this? Will the focus be on greenfield or brownfield projects? Would it be a mix of both?
I think so we have three models. So one is clearly about building our own resorts, which is the greenfield. And currently, we hope to complete two more this year and go live. And another two we will expand during the course of this year. We are also hoping to open up new greenfield, which will take some time to construct, maybe anywhere between 2 to 4 in the course of this year. So greenfield is an important component of the strategy. But today, as I see it, I think our swing has been towards a more capital light model. So we have a lot of partners whom we enter into long-term agreements from a lease perspective. So my sense is today's mix is about 50-50 lease versus owned. I think that ratio, as we grow, I think will swing to the incrementally maybe 30 to 35% would be owned, and the balance 65 to 70% could be in partnership with people who are putting in the capital, and that really makes for a strong, robust capital light model as we grow in. And from my own perspective, I think we are well on track for that goal of 10,000 keys by F30.
Okay. Also, Mr. Bhatt, what's going to be your expansion strategy going ahead? And are you targeting the new geographies or focusing on strengthening the existing destinations?
So from our perspective, I think both is what I would say. There are some popular destinations which are take places like Goa, for example, as an example. That's something we are looking to expand in. But recently, I think we just opened our first resort in Andhra Pradesh, in Dindi, which is on the banks of the Godavari. It's a very beautiful location. Similarly, we are looking to add more in states we are not present. So you should see some of that roll out, especially on the eastern side of India and which starts all the way from Andhra upwards. So that's one area, is expanding geographical focus. And then, of course, there are certain destinations which we'll keep adding to. And I think it's a combination strategy. And that's something which we have seen works the best, because I think most of our members would like newer destinations to explore, but there are always going to be all-time favorites where we would like to add more capacity.
Okay, and while we are talking about capacity addition, sir, help us with your Capex outlook for FY27 and FY26 and FY27 to meet your expansion targets going ahead.
So from our perspective, that's so two things are happening next year. As I said, we are going to start some greenfield projects and complete some during the course of this year, as well as take up renovation on some of our existing resorts. And both of them would mean an increased capital outlay. Now, of course, I don't have a number for you because a lot of these depends on approvals and so on and so forth coming in place. But the way I look at it is we have about 1,550 cash, which would mean that from our own perspective, if I look at it, I think we have plenty of capital to invest. And that's something we will fund through internal accruals, and we will not be taking any debt for this capex.
Right. Also, Mr. Bhatt, how are you addressing the completion of new age players like Airbnb or the boutique hotels like a Saffron Stays? How are you competing with these?
I think that that's a different segment. Obviously, there are two models here, and I do believe that as the industry grows, you will see more of this. Is one is there will be people who will be offering something different, and I think we do think of partnerships as part of the offering to our members. So maybe some of these options could be as partnerships, and then wherever we do see a trend which is more permanent, I think we might take some kind of shift into that position. But currently, I think the focus is in terms of tying up. So, for example, recently we did tie up with certain alternate accommodation players in many locations to try and give our members a sense of something different. And that's something we'll observe and see. But at this point, I do see partnerships as a way to offer our members more.
Mr. Bhatt, thanks so much for shedding some light on what the strategy going ahead is and also helping us understand your quarter four a little better. On that note, we'll let you go. Once again, thanks so much for joining us.
If you like this video, then like, share and subscribe to ET Now.